The United States runs on debt. That may sound negative, but it is not entirely bad. In America, loans are not just emergencies. They are tools. The real question is not whether debt is good or bad. The real question is, do you control debt, or does debt control you? Let's start with the foundation. In the USA, your financial life depends heavily on your credit score. A credit score is a number, usually between 300 and 850. The higher your score, the more banks trust you. Your credit score is built using payment history, credit usage, length of credit history, types of credit, new credit inquiries. If you miss payments, your score drops. If you manage credit responsibly, your score increases. Now let's talk about the main types of loans in America. First, credit cards. Credit cards are short-term loans. If you don't pay the full balance, interest is added. Interest rates can be very high, as sometimes over 20. Used wisely, credit cards build credit. Used emotionally, they create long-term debt. Second, student loans. Many Americans borrow money for college. Education is expensive. Student loans can take 10 to 30 years to repay. For some, education increases income. For others, it becomes a heavy burden. Third, auto loans. Most Americans finance their cars. Instead of paying full price, they make monthly payments. The problem? Cars lose value over time. So you are paying interest on a depreciating asset. Fourth, mortgages. This is the biggest loan most Americans take. A mortgage allows you to buy a home with a small down payment. Unlike cars, homes can increase in value. This makes mortgages more strategic if managed properly. Here is where things become serious. Interest. Interest is the price you pay for borrowing money. If you borrow $10,000 at 10 interest, you pay back more than $10,000. The longer the loan term, the more interest you pay. This is how banks make money. Now here is the hidden truth. Debt can build wealth if used for assets. Debt can destroy wealth if used for lifestyle. Borrowing for education, business, or real estate can increase future income. Borrowing for vacations, luxury items, or impulse spending creates financial stress. America's system rewards responsible borrowers. People with high credit scores get lower interest rates. Better loan offers financial flexibility. People with poor credit pay more for everything. So what is the smart strategy? First, build credit carefully. Pay every bill on time. Second, avoid high-interest debt like credit card balances. Third, understand loan terms before signing anything. Never focus only on the monthly payment. Focus on total repayment amount. Fourth, borrow only for things that can improve your financial future. Debt should be a tool, not a trap. The American loan system is powerful. It allows people to buy homes early, start businesses, access education, but without discipline, it creates lifelong payments. Financial freedom in the USA is not about avoiding loans completely. It is about understanding how they work. Control interest. Protect your credit score. Borrow strategically. Because in America, your credit history is your financial reputation.